Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Thursday morning pre-market webcast. S&P 500 E-mini futures daily chart, and what you're seeing here and what we saw in the overnight was a move back down to the monthly pivot. 2099.80 is the monthly pivot that we are using, and we traded to 2099.75 at about 4:45 in the morning. We've seen a bounce back to the weekly pivot at 2108.70. We're seeing a little bit of resistance there right now. What I was pointing out to my subscribers in the other webcast was the 50-day exponential moving average and how since the 8th of May, really on, we had support here. We've had some overshoots along the way, but generally the 50-day exponential moving average has kind of shown us the way with respect to buyable dips. And potentially we've got another buyable dip today. So the monthly pivot comes in at 2099.80. The 50-day exponential is at 2099.76. So things are basically linked up right at that level. As we head into the regular session, Monday, Tuesday, Wednesday, we saw the bulls hold the monthly pivot, get back over the weekly pivot, the mid band, which is sitting up at 2113.88, and go and test areas like the 2118, only to lose that area, have it slip back, and head lower and close, at or below those areas. So, I've been talking all year about how this is a two-sided market, that the bulls of 2013 are gone, they're not coming back, and these bulls have difficulty finishing, okay? The bears have always had difficulty finishing. We would not be in this position if the bears could finish anything off. So it's nice from a trading perspective because we've been getting really nice two-sided days that haven't been too volatile. Yesterday was a little bit whippy, especially in the afternoon. It was a very hard short to catch. I got whipped out on that one. I'm still long 99, and what we are doing today is we're looking at two potential areas to get short: the area of the weekly pivot and the area of the mid band. If we have failures up in either one of those areas, then that's a place where you can definitely try to do something on the short side. But for now, we're riding our longs from the monthly pivot. That's been the place to buy dips. That and the 50-day exponential moving average, that's been the place to be all week. Going back into last week, really, and the move down to 96. So, it's more of the same. It's going to break eventually. The Bollinger Bandwidth is sub 2. It's 1.92 as I'm taping this. So we're going to get an expansive move. But as long as we're engaging the mid band every day, we're going to stay in a state of compression. Don't anticipate expansion. Okay? Don't anticipate the direction of expansion. Because if you're wrong, you're going to be caught up in a situation that you can't control. So it's better to take advantage of the moves that we're getting intraday as we do. And as we get more clarity on the daily chart for an expansion for a multi-day move, then that's a separate trade. All right. So everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trading well, everybody.